Hey traders and investors, it's Serge Berger here. Today, because we have a holiday shortened week, I want to go through just the concept or the base case that some people seem to have out there that we can really see return of volatility as early as this week or next week, simply based on just the extent to which the market has rallied, the fact that we're getting into a period, sort of the July-August period, where we have seen volatility in the past. So I want to just kind of, sort of bring this up. So first of all, again, just for context, it's just extremely important to understand that we've had an insanely long and bullish, bullish move here off the 2009 lows. And for all intents and purposes, just from a trend perspective, it's definitely not over. You have divergences in various sorts, but you don't have a price confirmation of any sorts that this move is over. Neither from the index itself, the S&P, nor from the various, or at least not from more than a couple of the different sectors in there. So from that point of view, leaning against this tape, it's just a low probability move until we see some sort of confirmation. At the same time, we do have to ask ourselves, are we prepared after 5 years of a rampant bull market for any sort of pullback in anywhere between say 10 and 20%? And I think a lot of people are not prepared for that, nor are they invested. So it makes it a tricky point, a tricky juncture here, but all the more reason for us to basically just focus on price action. To put the whole volatility debate in a little bit of perspective, I just crafted a little chart of the S&P 500 in blue versus the VIX, which of course is the implied volatility of the S&P 500 of the options, and you can see basically, at some point we are definitely going to have some sort of mean reversion of this. In other words, stocks are going to come down and volatility will come up, which is what tends to happen. The question is, again, it's a question of timing. When is that going to happen? You can see we always had these periods, and obviously given the again, looking at this from a multi-year perspective on a weekly chart, you can see the slope of the line here from over the past couple of years. It's just gotten very steep, and volatility is just kind of really just nowhere, right? So the complacency is there. The question is, are people invested enough? From what I'm hearing from some of the folks, they're not. But then you have the complacency again. You have a tricky situation. All the more reason to focus on price action. Wait for price action to give you some sort of signal, and then at some point, I do think we'll have some sort of mean reversion. I don't think these ends have to necessarily meet in here it's anytime soon, but I think mean reversion move of the S&P anywhere between 10 and 20% here towards the end of a cyclical bull market certainly is possible. So keep that in the back of your mind. Again, price action is your clue, but just keep that in the back of your mind as we get into the July-August period, where a pullback at some point should start to be a little bit more of a realistic thing. June wasn't really a good pullback month because June tends to be a positive month. Hope this makes sense, guys. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Take care, and I'll see you in the next video.